Compass CEO and co-founder Robert Revkin's here at Post 9 exclusively. It's great to have you back, Robert. Thanks for being here. People are pointing out, I mean, even in a down tape, Horton's the #1 leader today. What does that tell you about the market's willingness to look through some of this stuff?
So in March, existing home sales were down 2% year over year. And that's not a surprise to us at Compass. We're the #1 brokerage firm in the country. And we can see that buyers have accepted these mortgage rates as a new normal. There's a lot of pent-up demand. The issue is really there's not enough sellers, not enough inventory, as opposed to there not being enough buyers. Our website traffic increased 18% in Q1 versus Q4. However, inventory exiting Q1 was 9% less than it was exiting Q4.
So nobody wants to give up their home in which they locked in years ago?
The fundamental issue is that 30% of homeowners are locked in mortgage rates at 3% or below. Then you have 72% of homeowners locked in mortgage rates of 4% and below. If you have a 3% mortgage rate, you consider that a financial asset and you don't want to lose it.
Right, unless you were forced to move, I guess, right? And if unemployment went to 6 or something, then you start to have to think about being more mobile, but that hasn't happened.
It hasn't happened. Every single week this year, less inventory has come online than the same week in the prior year. However, there is 60% more inventory today than there was last year because the buyer strike in the fall left the end of the year with more inventory.
So the Fed wants to bring down inflation, and housing is a really big part of it, right, on prices and on rents, and it has remained stubbornly high because of all these factors you're talking about. Is there movement?
Yeah, so prices for sales were down in March 1%, a little less than 1% year over year. Same in February, less than 1% year over year. However, sequentially, prices are up. Prices are up in March over both February and January.
What about rents?
Rents, rents are actually flat year over year. But if you're in New York City, they're moving up. New York City rents hit an all-time high in January and then another all-time high in March. Now $4,175 a month.
It seems hard to imagine in some ways, just given some of the economic realities, it would seem, of people not going to the office. What accounts for that, and how connected is it to the sale, to the purchase market?
Yeah, so as prices remain stubbornly high for sales and mortgage rates are high as well, affordability is a real issue on the sales side. And that's, you combine that with the lack of inventory, it's driving people to the rental market.
What are we seeing in some of those markets that really benefited from the movement of people out of cities to other areas as a result of being able to work remotely, places like Boise, Idaho, or Las Vegas?
Yeah, so the markets that are being hit most in terms of price, the markets that are cooling are the pandemic boom markets. Like you mentioned, you have Boise, Idaho, you have Las Vegas, you have Phoenix. They're getting hit the hardest.
It's funny, Redfin's had some data out last couple of days, and they actually quoted a realtor in Boise who said, "I was consistently busy in the fall, but things got really quiet in March after Silicon Valley Bank." How much of this is sort of the jolt of fear that was at least centered in San Francisco in March?
The Silicon Valley Bank impact, it's been there, but much less than expected. I think part of what's hitting the pandemic boom markets are CEOs across the country are asking their employees to come back to work. I think people have realized it's not about productivity, it's about connectivity. And leaders have an obligation to develop their people, and it's hard to develop people virtually than in person.